Hey guys, my name is Mike Munzing with Munzing Mortgage Group. Once again, I've been down here in San Clemente and the Orange County area for about 30 years, the last 25 doing lending and working closely with my friends in the real estate industry or the realtors and their buyers. Hey, this week, be sure to go over to my website at www.mikemunzing.com. Take a look at the rates for the week. Got lots of other great tools and such on the website there, but specifically for your open houses and for your buyers and also for your sellers so they know what's coming. Grab the rate sheet. I do keep it updated weekly so you know what's going on. Rates have held pretty much flat for the week. We've had a big bump, obviously, about 2 months ago. In the last month, or the last couple of months, things have been going up, but now they've plateaued a bit. Let's just get some stability at a little bit higher level. But once again, print that up so you know we do have some more exciting programs coming down the pipe. We've got 97% conforming loans so we can keep away from those FHAs. I have noted a couple of changes recently, all cash out for those of your clients who own their properties free and clear now. They can pull $625,000 out on the conforming jumbos. They don't have to have owned the property for a year. You've got the jumbo products can go all cash out now. They do have to have owned the property for a year for the above 625. Just some varieties out there that you really should know about. One thing I'm going to be covering coming up, I'm going to try to go into very great detail into what's coming from the Dodd-Frank bill, the Consumer Protection or the Consumer Finance Protection Bureau. They will increasingly be the group that will be covering the mortgages and the mortgage industry for your buyers, so we can know more what's going on to that, what to expect next year, how the QRMs, the quality residential mortgage requirements, are going to be coming down the pipe. That's going to change things for loans that are less than 20% down, and it will be critical for your buyers. Okay, this week I want to take a look at the report from what was Foreclosure Radar. Now it's Property Radar at propertyradar.com. Sean O'Toole up there in Northern California has been doing a great job for years. Now that foreclosures have backed off, he's doing a little bit broader spectrum review of that. But let's look at some of the charts and talk about what he's seeing here just for a little bit. The first chart shows you kind of over time the breakdown of the distressed sales versus the traditional sales. You can look about 2/3 of the way over the chart. That is when about 2008, where you see the big spread. Let's see, the top numbers are the distressed sales. The lower portion of the graph is the traditional non-distressed sales. You can see in this last month it trickled down just a little bit. For him, he said single-family residence and condo sales over the last month have dropped about 2.3% from June versus May. Actually, this is a June report. And year over year, it's down about 5.9%. So even though the market feels really hot, 1 year ago in California as a whole, it's dropped about 5.9%. A couple other aspects there are in the past 12 months, distressed sales have fallen about 46.5%, and the traditional non-distressed have jumped about 31.3%. Huge change from the distressed versus the non-distressed. And as he points out, a lot of that is due to government intervention. I talk about that a lot. So the government's getting involved and really keeping those banks from moving forward on the foreclosures. He does make the point that 30%, distressed sales have still been 30% of the overall market, which is 3 times what it had been at historical levels. Now, these numbers can also be seen on an additional chart here. This is a little more clearer as per the distressed versus the non-distressed. You can see there where it's very tight at the far end of the chart. That was prior to 2008. And then you can see the much larger gap as you move towards me. And that brings us up till 2013, where the gap is once again getting smaller with the government intervention. Next is a chart that I thought was kind of interesting. This is a kind of a what if chart. This is looking at California. It's looking at homes that are underwater, homeowners that are underwater. And as you move across the chart this way, it is the percentage increase in home values in California from 5% on over here to 25%. And it shows the number of homeowners who will get out from being underwater, basically from being upside down on their properties. The interesting numbers on the far side at 5%. If sales prices increase by 5%, then a little over 200,000 homeowners will no longer be underwater. If you move across the chart here, over here to 25%, right above me here, would be 1.1 million homeowners will move from being upside down underwater to being back above water on their properties there. Now, this is a little misleading. This considers exactly even from loan amount to sales price as being underwater. I've mentioned before on videos that doesn't get them out of the property. You still have closing costs and other aspects. So you'd really need to move those numbers around a bit. But overall, this gives you kind of an interesting look at if prices appreciate up 25%, 1.1 million folks will be out from being underwater. Next is a quick chart that shows cash buyers, all cash buyers. You can see back on the far end is 2004. As we move my direction, it gets up to the current level. We are still almost at the all-time highs of almost a little over 26% of the homes purchased in California are all cash. The peak was just below 30%, so we're right up there in that high level. Back in 2006, it was maybe 5 to 10% across the chart there. So interesting look at the all cash purchases and who's making those, but how that is affecting our market. Finally, as I often do with the foreclosure reports, I just want to take a quick glance at what's going on currently. You can see the notice of defaults, the notice of trustee sales, and the foreclosures on a quick chart here are dwindling as you come here towards, let's say June of 2013. We saw a little peak there in April, right on the end here, and then have trickled back off again. So the distressed sales, the foreclosure process is once again diminishing as you come across the chart. This is covered in their report. The website is once again www.propertyreport.com. You can get some really good information. I believe that is a free website. You should subscribe to that or at least get on their email list. It's good information. Well, hey, we're heading into the weekend now. My wife and I will be heading for about 7 days up on a road trip, heading up the California coast. This should be beautiful. I will have my computer with me. I'll have my phone with me. If you need me, I am there. I will be there. Leave a message. I'll get right back to you if I can't answer the phone. But it is gorgeous going up the coast. We have not been away for a bit, so we're just going to get away for a number of days next week. It should be beautiful weather. Should be beautiful weather here in Southern California as well. Keep my number handy. I am at 949-689-5626. I look forward to being there for you. I look forward to being there for your buyers. Once again, 30 years in the business. I know what I'm doing. I know how to help them get approved and really get them into the home or get them into the loan that will get them into the home that you're going to be selling them. Very great. Well, hey, God bless you. God bless your families. God bless this beautiful country. Have a wonderful weekend. Have a great next week. I won't be making a video, but I'll see you in a couple of weeks. But have a great time. God bless.